All right, let's talk about a real head-scratcher in the market today, Applied Digital, or APLD. So on the surface, their latest earnings report looked like a bit of a dud. They missed on revenue. But then the stock just took off like a rocket. So what on earth did investors see that the headline numbers didn't? Let's dive in and find the beat behind the miss.
So here's how we're going to break this all down. First, we'll look at that confusing quarterly snapshot. Then, we'll get to the heart of it, the massive $11 billion pivot to AI that changed everything. After that, we'll explore their secret sauce, the Dakota Advantage, and look at the data behind the market's incredibly bullish reaction. And finally, I'll give you my take with the next call.
Okay, so first up, let's dig into those numbers that had everybody scratching their heads. This is really a classic story of a company in the middle of a major transformation, and the financial results were sending some seriously mixed signals.
So take a look at this. On the top line, revenue, well, it was a miss. $38 million from Wall Street was looking for something closer to $42 million. Not great, right? But then, you look down at the non-GAAP earnings per share. Whoa. Analysts were expecting a loss of 14 cents a share, but APLV came in with a loss of just 3 cents. That's a huge beat. It tells you they have a much tighter grip on their costs than anybody was giving them credit for.
So you've got this revenue miss and this big earnings beat. How does the market react? Well, it didn't just shrug, it went absolutely wild. The stock shot up over 31% the very next day. So that's the big mystery we're here to solve. Why on earth did the stock soar on a revenue miss? And I'll tell you right now, the answer has almost nothing to do with this quarter's performance.
It's because the market was looking way down the road. Investors looked right past the present and got laser-focused on the future. Specifically, they saw this massive strategic pivot into becoming a key infrastructure player, like a landlord, for the entire AI revolution. And it all came down to one absolutely game-changing deal. And you don't have to take my word for it. Just listen to the CEO, Wes' comments. He's basically saying, forget what we used to be. We are now a leader in AI infrastructure. We're talking about a fundamental change here, a shift to long-term, locked-in, predictable revenue. And you know that $7 billion he mentioned? Yeah, that was just the appetizer.
So here's how it all played out, and this is really the key. During the quarter, they signed a huge deal with CoreWeave, they're a big player in AI cloud computing, for 250 megawatts of power. Big deal in itself, right? But then, right after the quarter closed, CoreWeave exercised an option for another 150 megawatts. So boom, just like that, they're at 400 megawatts. And over 15 years, that's expected to bring in around $11 billion. Forget the $38 million for the quarter. This is the number that made investors sit up and pay attention.
And look, this isn't just some pie-in-the-sky promise. Management laid out a very clear timeline. The first chunk of this is coming online at their Polaris Forge 1 campus by the end of this year, then more in 2026 and the rest in 2027. This gave Wall Street real, tangible dates to plug into their models. It made that $11 billion number feel incredibly real.
Okay, so you land an $11 billion deal. The next question from any sane investor is, great, but can you actually deliver? And that's where Applied Digital really started to shine on their earnings call. They laid out exactly how they plan to build these giant AI factories faster and more efficiently than their competition.
One of the biggest parts of their pitch is just pure speed. I mean, look at this. The old way of building these things, it takes like 2 years. Their new streamlined process, they're talking 12 to 14 months. And you have to understand, in the AI world right now, it is a land grab. Getting those GPUs fired up and running is everything. So being able to do it in basically half the time, that is a huge advantage.
And then there's their secret weapon, what they call the Dakota Advantage. It's pretty genius, actually. They build in North Dakota, where they have access to super cheap power. Plus, it's cold for a big chunk of the year, so they get free cooling. They combine that with some really slick liquid cooling tech. The end result is that they're incredibly power efficient. That PUE number of around 1.18 is seriously impressive. And for a customer, this isn't a small thing. We're talking potential savings in the billions of dollars over the long haul. That's a powerful sales pitch.
So, you've got this massive contract and a really smart way to execute on it. That's the story they told. Now, let's look at the hard data that shows the market wasn't just listening. They were buying, and they were buying big time.
Just look at the trading volume. On a normal day, maybe 16 million shares of APLD trade hands. The day after this earnings call, over 138 million. That's not just a few people getting excited. That is a tsunami of money pouring into the stock. It's the market as a whole saying, okay, we get it now. This company is different than we thought it was yesterday. And if you want to see where the real conviction was, You have to look at the options market. You had a crazy amount of trading, almost 500,000 contracts changing hands. And look at that split. 77% were calls. Those are bets that the stock is going to go up. So the traders using leverage, the ones making the really big bets, were overwhelmingly bullish. The conviction was just off the charts.
And it wasn't just the traders, the so-called fast money. The professional analysts, the folks at Needham, Lake Street, H.C. Wainwright, they all came out and basically said, yep, we agree. They jacked up their price targets. They all reiterated their buy ratings. It was a clean sweep. The entire investment community was on the same page. Okay, so that brings us to the big finale, the next call. We've looked at the confusing numbers, the massive new direction, their operational secret sauce, and how the market totally bought in. Now it's time for me to put my analyst hat on and tell you what I think.
So, it all boils down to this, doesn't it? Did the market get it right? Has Applied Digital truly made the leap from its, let's be honest, kind of volatile crypto hosting past into a solid, reliable infrastructure play for this massive AI megatrend?
Based on all the evidence, my call is a firm outperform. I think the market got this one right. That 31% jump wasn't just hype. It was a rational repricing of the stock based on a completely new business model, one that's now built on highly visible, long-term contracted cash flows. So why outperform? Well, here's what you need to be watching for. Number one is execution. They've got to deliver. We need to see that first facility start pumping out revenue late this year. Number two, financing. They need to lock down the money for this huge build-out, which takes away a lot of the risk. Three is growth. They're already talking about another big customer and more campuses on the horizon. And finally, you've got the big picture. The AI tailwind is just a monster, and Applied Digital has positioned itself to sail right into it. So in the end, it's a perfect example of the market hearing the signal through the noise, rewarding a clear vision for the future. And that's how you find the beat behind the miss. This is not financial advice.